Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 3rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it describes everything I say in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios. And therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. They are finally open for business. Anyway, the flash CPI estimates for Europe came in at 1.2%, expected to be 1.3%. They revised last month's number down slightly from 1.4% to 1.3%. Core consumer price index, which strips out some of the more volatile aspects of that number, for instance, like energy, alcohol, and tobacco for the most part, came in at 0.7%, expected to be 0.9%. And then moving back over here to the United States, we got Challenger job cuts, which really isn't that important, but since it's a week for the unemployment data, we can probably look at it negative 1.4%. It's not too bad, better than last month's for sure. And then on to non-farm productivity came in at 0.7%, expected to be 0.9%, and preliminary unit labor costs came in at 2.7%, expected to be 3.1%. Again, labor costs would be what the employer is paying the laborer, and we would like to see that go up. That's that wage inflation we would like to see. Anyway, came in at 2.7%, was supposed to be 3.1%, and they revised last month's number up slightly from 2.0% to 2.5%. Finally, here in the United States, we got ISM non-manufacturing, PMI, which is the Institute for Supply Management, our most important number for these data points. You know, it's flash across the pond. Ours is ISM. Non-manufacturing PMI, Purchasing Managers Index, anything above 50 is expansion, came in at 56.8, expected to be 58.1. And factory orders came in at 1.6%, expected to be 1.3%, and revised last month's number up from 1.2% to 1.6%. So good on factory orders. We want to see factories taking in more orders than even what was expected. That's always a good thing. And natural gas storages came in at 62 billion cubic feet, expected to be 47 billion cubic feet. Japan has a bank holiday, and then tomorrow we get our non-farm payroll. So that's the real big number for tomorrow. Everybody probably shoring up some positions. E-mini S&P is really taking a tank right now, but we'll talk about that in a moment. We've got we've got crude oil futures just slightly in negative territory by about 30 some odd cents, really wanting to trend, staying in line with this between $67 and $70, let's call it. Saw an article today, Saudi Arabia really wants oil up in the 80s. Somebody must want to buy an airplane or something to try and get that pricing. All right, gold futures moving a little bit higher today. We've had a big sell-off from that whole end of Russia buying 2,000 tons of gold. We're getting a little bit bounce off of the 200 simple moving average. That bounce, yesterday's really started making it look like a bit of a bottom when it kind of settled above that 200-day after being tested. Today bounced right off of it and straight away to the upside. Most of that probably a flight to safety as the equities are starting to see a little bit of a chink in their armor. And Bitcoin could be moving higher for that same very reason as the equities come out. We got Bitcoin moving higher. I think it was either Goldman Sachs or Morgan Stanley. One of those two banks said that they were going to start trading crypto too also. So once one does it, the rest of them are probably going to start opening up crypto shops as well. Bonds moving higher today by about a half of a point for the most part, 16 ticks. That's about a half point. 32 is 1 full point. Moving higher as we're looking at the equities come off. Again, VIX going to spike on that kind of move with the Dow Jones Industrial Average down over right around 300 points right now. bouncing off the low. Everybody was panicking on Twitter once it broke below the 200 SMA, came down. I was saying bulls are definitely looking to try and hold these 50 Fibonacci levels in the Dow Jones and in the E-mini S&Ps. We're holding that right now, but the 200 SMA is not looking too good. We really want to settle above that if you're a bull, and that would make that doji look very nice if we got the ability to rally up there and settle there. Again, this is the 38 Fibonacci, the 38 Fibonacci for the NASDAQ. It hasn't really touched that Fibonacci level yet, but what I was talking about was in the E-mini S&Ps. If we look over here, touching down on the 50-day moving average. This is on the 3-year chart daily. If we look at it on the 1-day chart, you can see it came down, kissed it. I tweeted that out when we were right about here, but we did pierce through that 50-day moving average. Right now, just slightly above that, maybe by a couple of points, but that is going to be the line in the sand. Bulls, again, would really like it to get above that 200 SMA right there, and that would make that look like a nice little bottom, kind of like this little doji there, to give it a little bit of boost to the upside for the bulls. Anyway, the E-mini S&Ps, this is the 50-day moving average, accelerated to the downside on economic data points and just forward guidance coming out of most of these companies not looking too good. Let's talk about a couple of trades that I did on the earnings. I said I wasn't going to play around with Tesla. Looked at Sprint. There's no money in it. There was Kraft was literally not worth trading. There was no money in that either. And Tesla, I didn't want to play it because I've already got those puts on. So I settled on APA. I wouldn't necessarily recommend this to just about everybody. It is a difficult stock to get in and out of. I just put an order in there and waited for somebody to come and hit me. They did. Didn't get anything off in my IRA because the defined risk aspect, trying to get that one call out there in time, or further up the tick ladder, or the options, the higher options just weren't trading for me in APA, so I couldn't get anything off of my IRA. But in my margin account, I was able to go in there and sell the May that expire tomorrow, the 43 calls in there for 29 cents, bought them back for 6 cents this morning. So nice little profit there on that move. I waited the early morning. I usually try and cover these right off the bat in the morning, but overnight we're trading down around this level, okay? Opened up way up here. Somebody must have left some orders in there in a broker's hand or something like that through earnings, and it made the bid sit up here. So those guys sold that out. As soon as that inventory was gone, it was off to the races, the downside. So I got out right around in this area here. So obviously I could have waited a little bit longer, but get out for a nickel is a pretty good deal for me anyway. So got out of that APA. Finally, wanted to talk about Tesla and Elon Musk. They actually they came out with the earnings in line with expectations, as we can see here, 325 versus 335. So they did beat, but Elon Musk had a crazy earnings call and was talking about how he wasn't going to raise money, and really kind of going off on a bit of a rant for a while, saying how great they were, and that if you are an investor in Tesla and can't handle the volatility, you should get out. Well, it looks like a lot of people kind of took him up on that. And the market has completely sold off and is near the lows of the day. So having said that, I didn't play it for an earnings, but I still have on those 2-year puts that I'm just kind of riding out. I just thought it was a bit bizarre. I mean, Elon Musk is kind of going off on a crazy train, if you ask me, trying to sell the flamethrowers and these sofas for $5,000, things like that. It just seems a little bit odd. It's like he's trying to sell on eBay, in a sense, to supplement his income or his losses in Tesla, which seems a little odd. But anyway, that's what he's doing. And I think investors are getting a little weary of his antics. So that's about it for today, playing that to the downside. Haven't found any real good earnings trades for this afternoon. A lot of things not really, I mean, there's a lot of earnings coming out, but just nothing I really are are looking to trade. So I'm kind of staying away from that. At the end of the day, give me a thumbs up or a thumbs down, like or dislike on this video. If you give me a dislike, let me know what I'm doing wrong so I can fix that. You know, if you guys are looking for me to talk about different things during these market commentaries, that is your pulpit to tell me, all right? So let me know how things are going with you guys. And Friday's webinar is going to be a really good one if you want to learn how to trade short puts, naked puts. This is for upside, and puts usually have pumped premiums. So we're going to be showing you how to trade those in that market or in that webinar. So check it out at protraderstrategies.com. Finally, if you can't take that, take it easy.